we've been talking a lot about the financial crisis, and we're going to talk about that a little bit as we get into it, but I want to go even further back to 2003, I believe, when your family's company, it's been around for decades at that point, decides maybe it's time to do something different financially, enter Riverside. Tell us what was going on.
Yeah, thank you, Jason. So we were a publicly traded company, traded on NASDAQ, really working hard to grow the earnings quarter over quarter like we're supposed to, but weren't getting any real appreciation of the value. Our family did own about 67% of the business, so you'd understand institutions not wanting to invest. And there came a time that we said it's time to do Plan B. Let's go back to being private. And we talked to some strategics, and 9/11 hit. Appropriately, this is 9/12, and everything stopped. And then we started getting calls from private equity groups, and I'm thinking, who are these? I should be careful saying this, but money-hungry folks from New York who just want to, get every buck out of our business that they can. I didn't know private equity until Riverside came along. And then we went into a process, as we had to as a publicly traded company, a very intense process. It was Riverside's first public-to-private transaction, and certainly a new experience for us. And at the end of the day, Jason, we had some top bidders. Riverside did not end up being the very top bidder, but we felt like they were the best partner for Dwyer Group.
So Pam, your firm had looked at a lot of different types of companies. You play in sort of the middle market, lower middle market space. What was it about this company then that was attractive that they were doing? And then what happens over that subsequent 5 or so years, 7 years, I guess, that you owned the company?
So first of all, what we saw was something that was a critical need in society, right? You need to have your house painted, you need to have your lawn mowed. So we like businesses that provide critical needs to people. We empirically have always felt that companies with strong value systems have outperformed those that don't, and Dwyer was a great example of a company with a superb values system. And we like the franchising model because it's very scalable. And so we saw our ability to implement some new systems, some new operational things that would help it and help it to grow.
So you get into the financial crisis 10 years ago. You probably at that point are essentially, based on a private equity model, you're ready to get out right around that time, get some money back to your investors. You have to ride it out for another couple years. What was going on from a consumer perspective there? And I want to get to where consumers are now later on, but take us back to that time for a minute.
It was an interesting time, Jason, because we've never felt a recession. Our businesses are primarily recession resistant. You think about Mr. Rooter Plumbing, Mr. Appliance, if your toilets aren't working, you're going to get them fixed.
Right.
But this was one recession that was different for us as it was for most. And a couple of our businesses did feel it. We were so grateful to have Riverside as our partner and to say, let's, as partners, agree that we're just going to keep moving. We're going to keep building this business, not look at exiting. It would be too premature to exit at that point. We built a lot of relationships with other potential add-on acquisitions for the future. We got some fun stories to tell about that. And we also helped provide greater value to our franchisees. So really helping them grow organically, created a buying group called Pro TradeNet, where our franchisees could benefit from the scale of the buying power amongst all these franchisees.
All right. So you sell the company in 2010, then you go back in 2014. Not unheard of in the private equity world, but somewhat rare. And from 2014 to 2018, you do 11 additional acquisitions. You sell the company this summer. So now we're up to date. As you look back, what made it a successful deal ultimately from a private equity perspective, especially the second time around?
Well, so I think ultimately one of the great things about private equity is we respond to external environments. So here we have the same company twice. In the first environment, that was an environment where we had an enormous recession. We had to hold the company through that recession and back it and help it sort of get controls. The next time, we were trying to de-risk the asset for our investors. So, even though we paid certainly a fulsome multiple the second time, we knew the company, we knew the management team, we knew what it could do, and we had built those relationships for the add-ons earlier in the process. So we were able to then bring all of those add-ons quickly into our family.
Right.
And grow the company. And what's really interesting is that we tripled enterprise value both times.
Wow.
So, it really speaks to private equity's ability to be agile and respond to different environments.
So I want to come back to you in a second and get sort of the state of play for private equity. But first I want to get the state of play for consumers. Here we are in 2018, the longest bull market in history, a booming economy. Are consumers really feeling that great? I mean, you're literally in their homes every day. How are they doing?
They are feeling that great. In fact, aside from 11 add-on acquisitions, wasn't much work, right?
Right.
We actually, with the help of Riverside, created this great, it's technology. It's called Neighborly, a community of home service experts, which is really taking all the disruption going on in the home service arena and saying, let's take advantage of this. We have all these franchisees, now 3,200 franchisees who can serve you, Jason, and all the people that are viewing out there. People need it. And so what we're finding is since we've launched Neighborly, we have a significant increase in our consumers using more than one of our brands, because now we're educating them that not only can you trust, 5-star painting, but you can also trust Molly Maid, because we're all part of the same company that's based on this core values, which is another big part of our relationship, is we have a mutual respect for the values, and we're professional, we're licensed, and customers just make my life easier for me, and that's what Neighborly does.
Right. All right, so Pam, let's get real on private equity right now. We're 10 years on, as we said, from the financial crisis. Private equity has really emerged as an asset class that is very attractive to investors, especially in light of how banks have been more highly regulated. You guys have $8 billion or so under management. You deal with investors all around the world. What's the deal-making environment like right now, especially given how valuations have come up so much?
Well, for sure, it's super competitive out there. But I think what we would say is you have to invest through every cycle, because investors are not happy to have you sitting on the sidelines. So that means you really have to change how you're looking at deals right now, which is you got to de-risk them. So buying companies a second time, if you really know the company and you see how you can take advantage of disruption, for example, as we did in Dwyer, that is a big advantage. So you just have to be prepared to figure out how you're going to de-risk an asset. And I will say, there's been a lot of noise. Private equity fees are high, et cetera, et cetera. But when you really look back at whether you use public market equivalents or anything, private equity always outperforms the other asset classes, because we can. And I think this is a good example of it. Our 2 holds for Dwyer. Right? Because in each case we responded differently, and still investors did well.
Only about 20 seconds to go. We heard a lot of good things about the consumer. You talked to all sorts of CEOs. Are they worried at all that this boom time is coming to an end?
I think I think it's a question of when, not if.
Right. Very good.